Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is a weekly technical analysis of the Chicago soybean complex. I'll start with Chicago soybeans themselves. Beans in the teens, but barely. Okay, so the ascending triangle pattern I noticed 4 weeks ago finally broke on the downside. This despite ascending triangles breaking upwards something like 6 out of 7 times. I guess we just found the 3 or 4 out of 10 one that broke lower. I had set a target X in the 1290 area. Last Friday that target was achieved. Indeed, it was done with all things. Last week being a weekly key reversal down. Yet at the same time, last Friday and the first 2 days of this week have created a possible bullish reversal pattern, a 3-day bullish morning star pattern. Now this pattern has also been tempered, as instead of a follow-through higher yesterday, we ended up with an indecisive doji cross. And today is not looking that keen as one would hope for a bullish reversal either. So you can see there are multiple forces pulling and pushing in different directions with different time frames here. So that is not all. One of the other things I spoke about last week was a possible second pattern that was and still is in progress, and is also related to recent events. In this we take the early June to date action, which has within it in the now old bearish ascending triangle, and count it as a part of a possible bearish halfway hesitation. If we look at it, we can see that early to mid-June is the left bearish flagpole, then mid-June to possibly mid-August is the halfway hesitation. And then from mid-August we may say, I say may, be having the right flagpole. Now I have to say the right flagpole is ragged at best, and I'm still pondering this as an idea. One thing that will become clear is that we do not see a significant move lower from this overtly bearish pattern in the next couple of weeks or so, then it will be retired and something else will have to be seen. Chicago soybean meal. I wrote some 8 weeks ago, and I quote, "The month of May was a monthly key reversal down. It is important to remember that." End of quote. Since then, the market has been effectively capped by the superb descending middle time, currently at 356.5, of the bearish 2021 Andrews pitchfork, reinforced by its recent partner, the descending short-medium moving average, currently 359.70. I've recognized this pitchfork here before and the job it has and continues to do, and I do so again. Now, there's been some further action I'd like to recognize that may lead to a possible new pattern. It is optimized a bit, but it seems appropriate. So, if we take the middle time and use it as the upper trend line for a possible descending triangle pattern, we can look at the very last days of June as the start of the baseline that is approximately horizontal, and that's currently about 345.40. The optimization happens because I have ignored the low 2/3 days of late June. Anyway, this gives a possible descending triangle which reaches its apex in about 3 weeks. Now this might need finessing or retiring, but is what seems to be happening right now. I cannot give a firm target either on the upside or the downside, and breaks happen here roughly 50-50 data suggests, but I can give an idea of the size of the move when either the middle time or the baseline have had confirmed breaks. A move up would be in the order of $24.30 on top of the broken middle time, and a move down would be about $19 off of the baseline. If I see anything else in the meanwhile, then I will of course let you know. Chicago soybean oil. The rather lopsided diamond pattern highlighted over many weeks now is still the key pattern here, but it has some competition now. Now a few words on this pattern. Diamond patterns can be tops, bottoms or continuations. In this particular case it is a top. 4 weeks ago the market broke down through the lower trend line but did not immediately follow through. After hesitating along the underside of the broken trend line, prices dropped 3 weeks halting briefly at the rising medium moving average, and that's currently at 61.87, before resuming their journey lower last week. The medium moving average is now resistance. The build-up of unreleased bearish pressure is what caused the big move down last Friday, finally becoming actually a weekly key reversal down last week. We can nevertheless see that the medium moving average is now pretty good resistance by the way the market over yesterday and the day before was capped by it. The bearishness from the diamond pattern seems now to be reasserting itself. So, what's going on now? Well, we have an immediate pattern in the making, a possible descending wedge pattern dating from the mid-July to date action, currently between 58.12 and 62.70. This seems to be currently corralling the market lower. We also have below a congestion zone, 57.64 to 59.44. However, this was penetrated easily last week, so its effectiveness may now be in question. We also now have an initial target X below at about 55.85 and a secondary target X1 in the 53.75 area for the lopsided diamond pattern. To contra this bearishness, it's also worth remembering that we now also have the long moving average, currently at 53.20, rising up slowly and soon likely to enter the frame. And I should point out that today we seem to be ganging for a possible bearish engulfing pattern. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.